In today's video, we're going to be discussing how I lost $2,400 in 3 trades, which ended up being a total losing session. Now, contrary to what most people believe, these are actual moments that you need to embrace in trading, because at the end of the day, losing trades are a normal reality and occurrence when it comes to day trading, but it's how we manage these moments of losing trades or losing sessions that will determine if we're going to lose a small percentage of our accounts or if we're going to blow our accounts entirely. So in today's video, we're going to share with you some valuable yet simple tips that will allow you to not only manage these losing moments, but at the same time, you're growing your trading account. To be honest, I think this is one of the most important aspects of trading that needs to be recognized, but very few people actually take the time to understand. Now, as we do in previous videos where we share with you our live trading sessions in regards to profits that we make, we're also going to share with you the live trades that we took in this losing session as well, and of course, share with you some valuable insight. If you enjoyed today's video and gained value, smash up the like button and subscribe to our channel if you haven't already. And after you watch this video, make sure that you also check out the trading resources down below where you can learn more about our trading community, access to free demo account links, as well as information on passive income platforms that we use and leverage to earn automated profits to the markets. With that being said, let's get started with today's video. So let's get started with today's topic of losing trades. This is a huge component that I think is widely misunderstood for the fact that a majority of traders out there tend to mainly focus on, sharing their profits and the money that they're making from their trading, but never really focus or share a lot of information about losing trades. And again, I say this is a crucial aspect because losing trades are inevitable. And like I said, it's how we handle those moments that can make a huge difference between blowing your accounts or just losing a small portion. And being that this is also in continuation of our 100K challenge where we're trying to grow our account to that 6-figure level, all the more reason why it's important to provide our viewers with a more realistic approach to how trading really works. Now, as you can see here, this is the topic on hand that we're going to be focused on in terms of this losing session where we lost $2,400. Now, we're going to show you some live footage and break down each of these trades so that way you can see how everything unfolded. Even though we were doing everything correctly based off of our rules-based strategy, at the end of the day, folks, we are always at the mercy of the markets, and markets are always going to do what it wants to do. So if we take a look at our first position here for Euro USD for a sell position, this was the first and only winning trade of this session. So we actually started off pretty well, but obviously it didn't work out in our favor. But in this example for Euro USD, we took a sell position here for the fact that we had the confluences of our indicators. Price was below the moving average, cross down momentum of the stochastics, and the RSI was in the proper position below our 50 level. Also had bearish divergence. So this was a key component of multiple levels of confluences, which resulted in a profitable 2-minute trade. But that was it. That was the only positive trade that we had in this session, and then everything just went south from this point on. Looking at the next trade for Euro GBP, we had the middle of a cross down momentum of our stochastics. Our RSI was in proper position below that 50 level, and price had also broken below our moving average, which does anticipate a potential trend reversal. Now, in addition to the levels of confluences from the strategy, I was also anticipating price to come down to the supporting trend line in efforts to create a new lower high, but obviously that wasn't the case, and this ended up being a bust. Third traded position was for the GBP USD for a sell. Positions of both our stochastics and the RSI confirmed that we did have further momentum to the downside based off of the rules for this strategy, and granted, that also failed. And last but not least, we had our Euro JPY, and this was actually a bit of a big surprise because just like we saw in our first and only winning trade, which was the Euro USD, we had very similar setups in terms of confirmations of our indicators, and we also had a double divergence between the price action, the stochastics, and the RSI. So I was pretty sure to see that we were going to see a winning trade, but granted, that did not happen either. So the point that I want y'all to understand from this is that it doesn't matter what rules-based strategy or no matter how on point your analysis may be, the markets are always going to do whatever it wants to do. And there are going to be moments that you will see where your analysis could be all lined up. Everything is telling you that markets are going to do one thing, and then the market does the complete opposite. And you have to be prepared for that, which is why it's important to have a proper risk management plan, which we're also going to be going over right now. Because like I said, It's these types of moments where we have losing trades or even losing sessions that we have to embrace and learn from these events. We learn from our failures, from our losses. First, we have to learn. Once we drop the L, then we can earn. So what I want to do is just give you an example of a risk management plan that you should be applying to your trading. Now, what we're going to be going here in terms of the numbers and percentages is just to give you a bit of an illustration. These numbers will be subjective and will vary depending on your skill level and your risk tolerance. But again, this is just to give you an idea so that way you can play with these numbers and come up with a plan that best suits for you. So in this example, we're going to assume that we have a $10,000 account, right? We have a $10,000 trading account at our disposal for our trading. Now we have three other categories that we want to be mindful of. This is very, very important. The first one here is percentage per trade, meaning what percentage of our accounts are we going to dedicate for our trading positions. Now, general consensus and recommendation is you should only risk about 1% of your account for each trade, okay? For each trade. So in this case, if we're dealing with a $10,000 account, 1% of that is $100. So we are only risking about $100 for each trade, okay? That's it, that's all we're risking, and we're gonna stick to this. Now, DT percent is a daily target in terms of what percentage of profits we want to target for each day. Now let's say for this, we want to target anywhere between 5 to 6%. All right, that means with the $10,000 account, our daily target is around $600. Okay, and then we have a daily loss limit. This is also important, folks. This is how much you are willing to sustain in terms of losses for each trading day. And let's say for this, we have about 4%. So with the $10,000 account, we're only willing to risk $400 per session, okay? These are very important factors that you need to apply to your trading and never deviate from your plan, okay? Now, the thing about a daily target and a daily stop loss or a daily loss limit is whichever you reach first, stop trading for the day. Okay, that's it. Whichever you reach first, stop trading for the day. It may sound tedious, but it's one of the best ways to preserve your accounts, prevent yourself from revenge trading or over trading. Now, a couple of things I want you to take note of this is that we're talking about percentages. We're not talking about an actual dollar amount, right? When we say have a daily target of profits you want to make, obviously you want it to be realistic, but also sustainable. You don't want to just say, oh, I want to make $1,000 in trading every day. Granted, if that falls in line with a conservative percentage of whatever account size you have, then yeah, by all means, try to target $1,000 per day. But if you only have, like, let's say $5,000 in your account, or even $10,000 in your account, it is better to target a conservative percentage rather than a finite number. And the cool thing about following a percentage is the fact that it will actually allow you to compound your earnings. Using this example of a $10,000 account, and we're only trading 1% for each trading position we take, the next day or even next week, that 1% could reflect a larger number. If we had, let's say, $10,000, we started with $10,000 and we grow our account to a point where we're now sitting at over $12,500 in our trading accounts. Well, guess what? That 1% is not going to be $100. It's now going to be $125. See what I mean? So you're still sticking with the percentages for your trades, for your daily targets and your daily losses, but the value of those percentages could reflect a greater number. Now, another cool thing that you could do with this is customize it with certain rules. For instance, if you get, 3 to 4 winning trades in a row, maybe stop trading, right? As the saying goes, you quit while you're ahead. Or if you lose, 3 to 4 losing trades. Sorry guys, I can't type well on this thing. Trades, in a row. Then also stop, right? Whether that meets your daily loss limit or not, these are things that you can customize and add to your trading plan. But whatever your trading plan is, stick to it. Do not deviate from that plan. And again, folks, these are just numbers that I want to go over as an example, but obviously they will be relative depending on you, your skill level, and your risk tolerance. Now, like I mentioned a few moments ago about how you can also add certain rules to follow, like if you win 3 to 4 trades in a row, then you stop trading for the day, you're going to learn a lot about yourself, about your trading, and of course, your own customized trading plan. And one of them I actually implemented in our previous session. So if we actually come here to the broker log of all the trades, here on the 21st, we had an amazing session where we only lost 2 out of 9 trades. We started the session with a loss, and then we had several consecutive wins, and then we ended it with another loss. Now, my profits for this session did not meet my target for the day, and my losses did not even come close to my daily loss limit. However, based off of the fact that we had 7 consecutive profitable trades, once we had that loss, I decided to stop for a couple reasons. 1, that loss did eat away the profits that we had just earned, and 2, the way that I thought of it, if I placed another trade, yes, it could compensate for the loss, not 100% of it, but it could compensate for some of the loss, or I could have jumped into another loss and damaged my profits even further. This coincides with that concept of quitting while you're ahead. You may not reach your daily loss limit or your daily profit for the day, but if you have a good run, avoid the temptation of over trading or revenge trading. And just to clarify, revenge trading is where you have certain amount of losses that you've sustained and you try to place more trades to make up for those losses. In most cases, that never works out. And instead of losing $100 or $200, you're now losing $300, $400, $500. And in retrospect, you're gonna wish that you only stopped at, a $100 loss. Now, overtrading can also come if you are in euphoria, right? You're in a winning streak and you just want to keep placing more trades because you think you're not going to lose, and then eventually you end up damaging the profits that you'd earn, and then you're going to sit back and think that you wish you had stopped, right? Now, on the following day, we also had another great session on the 22nd with, what are we looking at here? With only 1 losing trade out of 6, which ended up being our last trade of the session. And again, for that same concept, folks, of just having a number of consecutive wins, we ended up in a loss, and I just decided to quit while I was ahead. And then, of course, we also have our losing session of the day, which is today's main topic. So again, folks, while a lot of people tend to focus on the profits that people are making in the markets, it's equally important that people discuss the losses, which again are an inevitable aspect of trading. But it's how we handle these moments and the plan that we are following that's going to make the difference as to whether we lose a small amount of our accounts or if we end up blowing our entire account. And I'll leave you with this one final piece of advice. As I mentioned at the beginning of this video, it's always good that you practice your trading and your techniques on a demo account. It's also good that you practice your habits on your demo account as well. Apply the principles that we went over and apply that to your demo trading, because the habits that you formulate, whether it be good or bad, on your demo accounts are going to carry over when you start trading with live funds. Regardless if you're trading with $1,000 or $10,000, remember, it's not the amount of money that you have in your trading account, it's how you use it and manage it that will allow you to grow and prosper in your trading. So ladies and gentlemen, that is our video for today. Hope you found it helpful. And again, if you have any questions, reach out anytime. Hope you gain some value from this break off of talking about profits all the time and focus more on the losses that we can and will endure from time to time. And hope that this will help you manage those moments in your trading from a much better perspective. Don't forget to check out the information down below in the video description to learn more about different trading resources that we provide in our community, free demo account links, and of course, resources on passive income platforms that we use and leverage to access automated profits through the markets. Thanks again for watching. We appreciate and love all your support. Take care. God bless. See you on the next one.